All right, folks. Before we get started, you have to pardon me if I suddenly get cut off. I've got bad weather at this point. Okay, but that said, let's get started. So, what do we see for the moment, folks? If we look at our equity markets, we are in negative territory for European equities. We are continuing the huge sell-off that we saw yesterday, that we saw in the previous day. If we look at our currency markets, we actually have our euros up around their highs at the moment, our cable around its highs. We seem to have a divergence between equity markets and your currencies. Now, one of the reasons behind this, we saw some strong numbers out of Europe earlier. In the UK, you saw your SIP services index coming out better than expected. Let me just show that. So in the UK, we saw SIP services index coming out better than expected at 55.4. We also had your month-on-month retail sales numbers for the Eurozone surprising. It came out at 0.9%. Market was looking for only a 0.5% rebound. So because of this, our technical correction in Euro and GU left sharp enough that when you look at your daily picture, you'd notice that you've exceeded yesterday's highs already in Euro. You are approaching your Monday opening levels in cable. That said, however, stock market remains weak. We don't really have a lot of other good news from an intermarket perspective. So I'm thinking maybe our focus going forward would be to continue that downtrend, that pattern of lower highs, lower lows in your Euro daily charts for the last 2 weeks, in your GU chart for the last few days. So proximity to resistances is telling me, why don't I look for the possibility of taking the short side of the market? So that said, folks, let us take a look at our lower time frames. What exactly are we seeing at this point? If you look at your Euro and GU in particular, you'll notice that the previous hourly candle was either a doji or a high wave spinning top. Those two candles suggest that you've lost bullish momentum. Prepare for a potential pullback. Okay, maybe a test of your breakout point. So let's look at specifics. Let's start with Euro. What do we have in Euro? From the big picture, as we said, we find ourselves with a sharp rally today, but when we look at the stock market, we are seeing a poor performance out of European equities. We're not exactly in a risk-on environment. Okay? If I look at our indicators, what do I see? From the daily charts, we have a flat MACD for now. Our stochastic potentially could cross higher on us. But look closely and you'll notice that we're having trouble with our resistance level at 43.45. The previous hourly candle was a high wave doji. Suggestion, resistance plus doji tells me loss of bullish momentum. All I need now are excuses for taking the sell side of the market. Do I have them? Oh, by the way, just to put things on the up and up, I actually lost money earlier in Euro. I tried taking the sell side. I had a sell limit at 42.80. That was before the retail sales numbers, and I got stopped out on that one. But having said that, I just wanted to make that clear that I've already been shorting Euro earlier, although the first short that I took was stopped out. Now, what am I seeing intraday? From the 4-hour level, we look bullish. MACD stochastics rising. Your candles so far looks bullish. Of course, it would be a while before you could expect your 4-hour charts to show signs of lost momentum. From the hourly picture, are we similarly bullish? Well, you're crawling in overbought territory for stochastics. You're rising in MACD. But again, you find yourself under 4345, under this previous congestion floor. So to me, unless you give me a close above 4345, I would look at this and I will tell myself, we're developing a nice resistance already. What we don't have at the moment are sell signals from our hourly charts, from our 4-hour picture. But maybe when we look at even lower time frames, 15, 5 minutes, we have something there. So let me see 15-minute picture. We're topping off in MACD. We've got a bearish stochastic. Charts show a congestion. 5 minutes. We have a confluence of bears. So folks, let's put it this way. I can either take the sell side on a break of this 5-minute congestion support, on a push under the 4314 region, or I can take a sell side coming from just under 4345. The important thing is we have a stop loss closely placed above that 4345 region. A stop loss around your 200 SMA at 4350. Okay? What's your target? Initial objective would be to push to your strong resistance level from before, your 4282 price point. I would say consider partial profits at that 4282 area and see whether we can ease off some more. Again, when I look at the stock market, there's nothing there that's telling me that there is risk appetite. When I look at the bond market, I've got Euro bonds selling off. So the only reason that we have this spike in EUR/USD was that basically people are dumping the dollar. But they've been dumping the dollar for some time. There's no fresh reason to dump the dollar, although we do have data coming out later. Later, we will be seeing your ISM non-manufacturing index. We will be seeing your ADP employment change data, and those could potentially be bad. However, I would point out, guys, that bad numbers out of the U.S. would necessarily be bad for equity markets even more, which would mean we should actually be looking for a stronger dollar still at this point. Okay, so folks, looking at our charts, we should think about this as a bear market. We actually have a break of 43.14, so this could be seen as a potential entry. This reward is not impressive, given that the ideal stop is above your 43.45 region at your 200-hour SMA at 43.50. But if you do take the sell side, we would suggest partials at 42.85, just above 42.82, and we would suggest that people look for a steeper pullback, look for a retracement at least towards 50 fib, towards the 50 fib level, maybe even a pullback all the way down to 61.8 fib at your 42.19 region. Remember that when you have breakouts from a congestion, more often than not, a pullback following the breakout would see a steep move. A pullback following a breakout would normally see 50 to 61.8 fib retracement. So we are counting on that usual behavior of a steep pullback on a wide-ranging market breakout, especially under current conditions where we don't have everything in place calling for a bullish market. What do we mean by this? Everything in place would mean stock market should be up. You've got your good numbers supporting that breakout. In this case, the stocks are down, so we doubt just how sustainable the breakout is. We would feel more comfortable if we actually have a classic sharp pullback in this current market environment. So guys, looking at euro, we already have a breakout for we already have enough to call for the pullback towards your breakout point, 4282. Maybe even dip below that towards 50 fib at 4246. Or maybe even pull back all the way down to 61.8 fib retracement. Again, when given a situation where you have a break of a wide-ranging market, your pullback would tend to be very sharp. Well, okay, let me just address the dollar question. Could the dollar be dumped longer term in anticipation of its falling when U.S. credit rating is downgraded? Well, you know that my main concern is that we actually get a QE3 program. Okay, that's my main concern. If there's no QE3 and you have the credit rating of the US downgraded, I would put it from this perspective. A credit rating downgrade in the US would mean that it will be a lot more expensive to do business. It will be a lot more expensive to borrow money from US banks. It will be more expensive to borrow money, period, in the US. So interest rates will go up no matter what the Fed will do, even if the Fed will keep rates steady at where it is right now. If there's a credit rating downgrade, a natural effect of that would be banks would be unlikely to lend money. Banks would raise their interest rates. Remember, interest rates are there in order to, or what's the purpose of an interest rate? The purpose of an interest rate is to cover the possibility of a default, cover the possibility that you're not going to get paid when you lend someone money. So, because the credit rating is downgraded, everyone's expense of doing business goes up. And with higher interest rates, you might actually even see a stronger dollar. Knee-jerk response on any downgrade would of course be bad, since people will say, hey, that's bad, that's a bad thing. But unlike an ordinary country, unlike say the Philippines, or unlike say Thailand, or unlike Malaysia, where credit rating downgrades and upgrades would be very significant, where credit rating downgrades could mean fund flows, if the dollar or if the US government gets a credit rating downgrade, what can the market do? The US bond market is still the largest in the world. Well, Chris, we already have the SNB lowering interest rates in Switzerland. It's the first step in weakening the Swiss franc. They're not going the active route. The active way of doing doing this would be for them to intervene directly. They've tried that last year. They lost money last year. So for now, they're doing the easier way of weakening a currency, lowering your interest rates. I won't expect a sharp turnaround, but it will be difficult for the Swiss franc to generate new lows, for USD/CHF to generate new lows under this environment. And I'd be a willing buyer if I find it at a good support and with buy signals. So steady sell-off, I don't think that a big sell-off can happen. But your USD/CHF, your EUR/CHF beginning to trend higher, or at the very least congesting, more likely probably congesting for now. That is something that I would look for. Oh, let's get back to Aussie. So guys, Euro, we're thinking ease off to 42.82. Partial profits around 42.85, and look for a further sell-off, a pullback all the way down to 61.8 fib. It is important to manage the trade. Yeah, remind myself that. I should remind myself that. I sometimes get lazy when I'm trading, that I don't book profits. I end up with markets reversing on me and with a loss. So it is important to manage the trade You see 42.82, try to book profits, and hopefully with the rest of the trade, you get to push all the way down to 4243 or even 4219. On a breakout from a congestion, you normally would expect a sharp pullback happening. Let me take a look at Aussie. I'm actually pretty bearish with respect to Aussie. We had a sharp sell-off yesterday already. I tend to think with us entering this previous congestion, focus would have to be on getting to that congestion floor at 106.07. Why are we suddenly bearish in Aussie? We heard from the RBA. And what did the RBA say? Or what didn't the RBA say? The RBA did not commit to a near-term rate hike. Okay? The RBA is concerned about global world economic weakness. So, without the threat of an immediate rate hike, or the absence of the threat of an immediate rate hike, pulls one of the basis for a stronger Aussie. Before, we always assume that there will be another rate hike in Australia, and then with that rate hike, you have a widening spread, a widening premium. But in this case, or from what we have seen out of the RBA statement, no immediate rate hikes happening. Possibly even no more rate hikes. Data that has been coming out of Australia has been poor. Okay? The numbers that we've gotten from Australia this week, disappointed on the downside. What else? We also have this threat of another recession in the U.S. The idea right now that's working in a lot of people's minds is with the U.S. government crimping on its expenditure, with the U.S. government adopting austerity measures, then it would mean slower business. Okay, maybe less fighter jets being bought, less roads being built. So, less government spending will mean that an already vulnerable U.S. economy, an already slower U.S. economy, is at risk of getting slower even further. And should that happen, a slowdown in the U.S. economy would mean less exports for Australia. Less exports for Australia would mean your trade balance would deteriorate. By the way, trade balance data earlier came out worse than expected, or less than expected, although still in plus territory. So all of this tells me that it will be difficult for Aussie to rally, and I should focus on having a sell on dips or sell on rallies market. And for now, the attractive target is to ease off towards your previous congestion floor, your 106.07 region. It's still Wednesday. We have plenty of time to look for that move. Below 106.07, I can't commit. Since if you look at your chart, that 106.07 makes for a decent support level. We've had false breakouts, but generally we ended up back above that 106.07 area. For now, okay, let's take a look at the technical setup. From the weekly charts, we certainly have a bearish engulfing already. The possibility of a double top. When you go dailies, what are we getting? Confluence of bears. I think what we have today is more of a technical pullback. Let's see the fibs. Okay, looks like we haven't even gotten to 38.2 fib retracement, but we should consider ourselves well resisted around the 107.89 region. So I would say I would put us as I would say that we've got a good resistance area from 107.89 towards your 108.26 price point. Okay, so looking at Aussie, I don't see any reason why we should be looking for sustained gains. By the way, there's always been an argument that, hey, with respect to Aussie, you have gold rallying. In a risk-averse situation, gold rallies, and if commodities like gold and silver rallies, then commodity currencies should be well supported. Guess what? Even if we are to assume that all the gold in the world is coming out of Australia, which is not, most of the gold production comes out of South Africa. But even if we were to say that all the gold in the world comes out of Australia, on an annual basis, that's only worth $127 billion of gold production with gold pegged at 1,600. 127 billion. How much Aussie gets traded in the market daily? You have about 280 billion Australian dollars traded every day. So even if we use the argument of gold will prop your Aussie up, compared to the size of the forex market, it's not enough. It happens when you have an environment that is already conducive to a bullish Aussie. When we know that interest rates will go up anyway. When we know that the Australian economy is doing well anyway. So under those conditions, and we see that that the gold prices are rising, then we say gold's up, Aussie is up. But under adverse conditions, when we have concerns about Australian growth, when the RBA is not as hawkish as it was, then a gold rally will not necessarily turn things around for the Aussie. Alrighty, let's move on. And let's take a look at our charts. Again, we were looking at the hourlies earlier from the broader picture, and what were we saying? We had our dojis and spinning tops in hourly euro, hourly GU. For hourly euro, we thought that, okay, that's going to be a good sign. Let's look for weakness in euro. For the moment, I see euro pounds dropping as well, so euro would be the better candidate in generating a pullback compared to cable. As EU RGBP drops, it would be difficult for GBP USD to generate its own bear market. So guys, because of this current black candle in your hourly euro pound chart, because of this, we tend to think that for now, your euro is the better candidate in generating a pullback. That said though, let's take a look at cable. Just how vulnerable is it as well in generating a pullback? We were surprised today by SIPS Services Index. Came out 55.4, market was looking for 53.4. Yesterday, however, or the other day, Monday, we had a very bad number in manufacturing, in your SIPS manufacturing index out of the UK. We almost went contraction territory. We almost fell below 50. So, what does that mean for us? Well, that means that, again, we have a risk-averse environment in the UK. For today, your FTSE is actually has the biggest losses among the European equity indices. But let's take a look at GBP USD itself. Just what kind of pullback, just what kind of sell-off are we looking at? All right, I was actually looking for that spike earlier to be capped around 63.88. It seems that we actually managed to push above 63.88. Yet now we are back under it. In the previous hour, we said that we had a spinning top. A high wave spinning top is normally sign of lost momentum. Big picture, you have a broadening pattern in GU. Okay, this is a broadening pattern. You have higher highs, Ghana, if you're intraday trader, I would suggest hourly charts. I would also suggest that if you have a nice trending market in the dailies, then draw it in the daily charts. Okay, look at the daily support resistances as strong support, strong resistances. But if you're intraday, focus on your hourly level fibs. So, big picture, we have this broadening top. A broadening top is defined by higher highs and higher lows. You can think of it as a reverse triangle. Broadening tops, when they appear, are seen as a sign of a possible turnaround, a possible bearish reversal. Look at it from this perspective. Bulls were able to push prices higher, but they've been unable to hold on to it. Bears have been able to grab hold of the market and take things just a little bit lower. So what am I saying? From the big picture, there's a risk that your GU could reverse on us because of this broadening pattern. Indicator-wise, stochastic is down, although MACD is rising. Now, intraday, what's the possibility of further weakness? We had good data earlier, but that's about it. Your stock market, despite your good data, did not really rally. It's still around its lows. From the 4-hour indicators, we have a bottoming out in MACD. We have a bullish stochastic. The only difference between this and your euro is that cable managed to push past its 63.88 resistances. So because of this push above 63.88, there's that element of looking for further gains. So it is important for me to see what kind of close I'm going to get in the latest R. Will we actually develop so let me just fix this. Will we actually develop an evening star in our hourly charts for GU with the close of the R? Okay, that's one of the questions that I have. And if we develop an evening star, will we close below 63.88? If you're thinking I can sell GU, it would be best to have that close under 63.88. It would be best to have an evening star closing under 63.88. Even better, under the midpoint of this white candle. Now, if we are to look at the hourly levels, what kind of signals are we getting? We're overbought in stochastic, we're rising in MACD. Because we managed to push above 63.88, it is justifiable that we are overbought, unlike again in euro, where we didn't manage to push through. So guys, we can't expect an immediate sell-off in GU. There are bearish indications, there are hints of a bear market developing, but nothing here tells me that it's time for me to pull the trigger on a sell. Ghana, well, to be honest, I'm more used to using stochastics and MACD together. RSI, I prefer using RSI by itself. If I trade using RSI, it will be a decision based on RSI and nothing else. Well, maybe EMA lines. But I don't really often trade based on RSI these days. I used to use it, but you know, you don't get a lot of signals using RSI. I look at RSI and I look at it as a trend following type of indicator. So guys, GU, we're looking for a pullback. It would be nice if we could pull back towards the 50 fib area, your 63.29 region. That seems to be right around the previous resistance level as well. Well, okay, technically we are, okay, excuse me. Normally we look for a 61.8 fib retracement, especially if our rally is new. if we just saw a breakout from a congestion, I would look for a sharp pullback, 61.8 fib, 50 fib. Now, if you're actually at wave 2 already, meaning you have an upswing already and you're looking at another upswing developing, then at that point, I would look for 38.2 fib retracement, a smaller retracement. But it's not always 38.2. It's 61.8 fib, 38.2 fib. Of course, these days, aggressive traders would even look at 14.6 and 23.6 just to come up with a potential entry point. Guys, we are seeing new lows, well, not quite new lows, but we are seeing a sell-off at the moment in U.S. equity futures. At the open of European markets, we actually spiked up in U.S. equities, but in U.S. equity futures, but we are now dropping. So what is the implication of this to me? Looks like we should go back to our broader view and see just how broad a pullback, how broad a sell-off are we getting. So what are we getting here? Our euro is now around your, or just around your 42.82 area. Again, this is a partial profit area for us, although we would look for a further pullback. But from a money management perspective, it would be a good idea to book part of your profits now and then hope for even more sell-off. Hope for a sell-off towards 42.18 or 42.24, 42.41, 50 fib and 61.8 fib respectively. Let me see. Is this broad-based? Let me just check my other charts. So US equity futures are breaking lower. Your European equity markets are heading to their earlier lows. And what else? Looks like we're beginning to pick up in our bond market. At the open of European markets, we actually saw the euro bond, the benchmark for euro-denominated debt, the 10-year euro bond, easing off, but we're now bouncing there. So it looks like we are resolved that this is a risk-averse environment at the moment. So we should be looking for our euros, our GUs, and your euro yen to pull back. Okay, speaking of euro yen, let's take a look at EUR JPY. Oh, sure. Let's go over euro first. Okay, euro essentially, we saw this big spike following the release of better than expected retail sales numbers. Earlier, I was actually short on this and I was stopped out. I shorted. I had a sell limit at 42.80. That sell limit was triggered when you had better than expected retail sales numbers. But to me, stock market is down. So with the stock market dropping, any rally in euro would be difficult to sustain. And now we found ourselves with a high wave doji in the previous hour. Unlike in cable, we had a high wave doji while below a resistance level. That makes it even more difficult to push any higher. So despite a bullish outlook from hourly indicators, your 4-hour charts, we decided high wave doji suggests loss of momentum, focus on the lower time frames, look for excuses to take the sell side of the market. And indeed, our 15-minute charts were already dropping. Our 5-minute charts pushed below the congestion floor, below its 43.14 region. Now, this pullback so far is limited, and again, we do face a strong support at 42.82. So as a trading strategy, as a trade management strategy, when you see a support level, you do partial profits. You might want to move your stop loss to break even. And for the rest of the trade, you'd like to hope for a deeper pullback, maybe something that would see 61.8 fib or 50 fib retracement level before it actually goes back to your trail stop. Again, when you are breaking out of a congestion, you normally would expect a sharp pullback to happen. And we've been congesting for 2 days. We just broke past the congestion resistances earlier. So we're looking for a sharp pullback to happen today. Today. Alright guys, let me just revisit my equity charts. Anything new? Nothing new really. Looks like it's really your FTSE which is at risk of seeing new lows. US equity futures, we are coming out of our European session congestion floor. But let's take a look at Euro Yen now. EUR JPY, just like EUR USD, has pulled back. We actually have a rejection from the 50 fib retracement level. What else is happening here? How am I doing in dollar yen? Dollar yen's dropping, so that means I could expect my EUR JPY to have a credible attempt at pushing below 38.2 fib, pushing below 1005, 1006. What are we seeing from indicators? In the daily charts, we have a mixed set of signals. We tried rallying. We got to the opening levels from yesterday. Overall bias is bearish considering your EMA line. From the 4-hour picture, you have a confluence of buys, but you're now developing a long wick. At the close of the hour, we will also have the close of our 4-hour candle. And from the look of things, we're going to have a long wick. We risk developing a hammer, an inverted hammer, in our 4-hour charts. What else? Well, just like in your EUR USD, your hourly picture is developing an evening star. In fact, you have a bearish abandoned baby. You do have a doji here, and you did gap higher a bit. So, what do we need, folks? We found ourselves rejected from resistances. We currently are just above a support level, so I guess sells can only be taken if we push below 38.2 fib, if we push back below that 1006, 1005 region. Candlesticks are suggesting that this will happen. Let me see. Indicators are still bullish in the hourly level, but when you go 15 and 5, you have a confluence of bears in 15-minute charts, along with, well, for now, a mixed view in 5-minute picture. So, I guess there's no immediate call for shorting given proximity to the support. But because we are likely to get an evening star doji, the focus then would be in the next hour, get a push below 1006. Push below 1006, and we tell ourselves the entry of the prior congestion, look for a sell-off towards 109.54, maybe even under the maybe even all the way down to your congestion floor at 109.22. Ghana 15-minute as oh yeah, and that makes us even more bearish. All we need are prices. After looking at your indicators, your stochastics, your MACDs, your Williams percent R, your RSIs, what have you. After looking at all the indicators that you have in your charts, taking action normally boils down to basic support and resistance rules. If you find yourself around the support, the idea is to look for a buy. You only consider shorting if the support gives way. You find yourself around the resistance, the idea is to take the sell side of the market. The only way you can buy is if the resistance gives way. So in this case, despite our bearish reversal patterns, despite our bearish confluence, because we have a support line immediately below us, the more prudent course of action would be to push below that 1005 region. Okay, questions, guys? Any chart that you'd like us to go over or to look into? So for now, we have a EUR-AUD. Wow, okay, that's something that I haven't looked at in a while. Ghana, if you're talking Euro-Yen, I would say no. Risk reward is bad at this point. Best to just look for a break of 1005. If you want to jump in, you can always jump in, but because of the support, personally, I won't. Because of that support level that you have at 1007. EUR-AUD, okay. Wow. Like we are just around the strong resistance level. Unfortunately, we have a weak Aussie at this point. So I'm thinking there's actually a good chance of pushing above 33.19. Oh, this. Yeah, 200 SMA in the 4-hour charts. Well, you continue to look bullish. You're still overbought in your stochastic. You have a rising MACD. The body of your of your 4-hour candles are widening again. So there's a suggestion of momentum building. But of course, it's not prudent to buy because of your resistances. Your 4-hour 200 SMA and your 33.19 price point. You have a bullish bias in 4-hour charts, bullish bias in the daily level. For now, a mixed set of signals in the hourly time frame. I think this could be a buy on dips market. Give us a decent pullback. See us coming from your 3202 region. Oh, that's like almost 100 pips away. So I guess the immediate risk now is to pull back a bit, get a rejection from 33.19. But from the way your daily charts look, and given how bearish we are in Aussie as well, I would say look for buys from that 3202 region. So for now, you risk a pullback towards 3202, at the very least 3238. But this to us is a buy on dips market. We are a lot more bearish in Aussie for the moment than in Euro. So Vishal, you look bullish here. I think it's a matter of time before you eventually get your breakout. Dollar Swiss is okay. I was looking for a flag pattern breakout. Looks like we're pulling back. But remember, we now have a policy to weaken the Swiss franc in place. So far, the SNB is not intervening in the market, but they've already lowered the interest rate. So what do we think is happening here? I think that it would be difficult to generate new lows in dollar Swiss. At this point, we actually are around a nice area already. I look at the possibility of bouncing off your 76.86 price point. So far, there hasn't been any announcement about intervention. So far, I haven't heard or read anything about the SNB going into the market. That earlier spike that we saw was the announcement of a rate cut. What we need to see next is them actually putting money where their mouths are and really actively managing the USD CHF higher, actively weakening Swiss franc. Cutting interest rates is a passive way of weakening a currency. Well, not much for a loony trader. But what do we know? We know that from a policy perspective, the BOC has been talking about the possible rate hikes. But we also know that there's a risk of a slowdown in the US. So from a Fundi perspective, looks like I don't have any clear bias. Technically, you look bullish, however. You continue to see higher highs. You have a confluence of buys in your daily chart. And how big of a pullback have we seen? Let me see this from an intraday picture. You're from the 4-hour charts, you really have a good higher high, higher low pattern. If we draw fibs, where do we find ourselves? Not quite 38.2 fibs, so maybe I would look at the possibility of easing off further. Try to pick this up from your 38.2 fib and 95.55 region, from between 95.47 and 95.56. So you look bullish from the daily charts. Your 4-hour charts has a bearish stochastic, a topping off in MACD. EMA lines are rising. Test those EMA lines. Previous 4-hour candles suggested lost momentum. We've had similar situations before, and we saw a pullback only to rally again. Hourly charts are mixed. So I guess at this point, I would prefer jumping long from, say, 95.56. But given how the hourly has a bullish cross in stochastic, given the way we have stayed above 23.6 fib, 95.80, I may not get that. Give me a push and a close above 96.09, and I would look for new highs to be generated. Or give me 95.56, and I'd look for a bounce off that price point. I'd look to rally towards your 96.34 highs. So this to me looks bullish. We're just not in a position to jump in immediately. Either we get an upside breakout, or we do so coming from better vantage point, coming from just above 95.56. All right, folks. Anything else? Any other concerns, questions, comments? So when we get back to our overview, we're not really seeing the kind of pullback that we want to see. However, we continue to doubt how sustainable euro and cable rallies are, considering the way equities have remained weak. So this to us remains to be a sell on rallies market. Any other questions, concerns? Otherwise, okay, sure. Let's do that. Well, here's how I would plot our fibs in the hourly. We don't seem to have a good confluence between fibs and price action. The only thing that strikes out is your 55th area, your 31-36 region. So right now we're below a strong resistance level. We tend to think that given how weak Aussie is, we are likely to push through that price point. As far as immediate pullbacks are concerned, I don't see 23.6 fib as being significant. I think the best pullback point that we can have is at 3202. Excuse me. Looks like we're not even getting there. We're trying to push up already. Although for now, with your EUR AUD trapped in a congestion, having trouble in breaking lower, I have my doubts about our ability to push through 33.19 at this point. This would probably just be another congestion. Vishal, any other concern on this? Okay, folks, we're out of time, so thanks for joining. And good luck for the rest of the week. Good luck on Friday's NFP numbers. They could be terrible.